Hi, everybody. Welcome back to Momentum, the podcast where we sit down with interesting and successful community members in order to have conversations that will inspire and empower the next generation of our community's leaders. I'm your host, Victor Braca, and I just wrapped up an amazing conversation with Elliot Horowitz. Elliot is the founder at Equities, a private real estate lender and investor based in Brooklyn. We spoke about Elliot's early days, including his time on Wall Street as a trader and a broker, how he transitioned from decades in the corporate world to starting his own company, and the one crucial thing he says young adults must have if they want to become successful. This was a great conversation. I hope you enjoy. Elliot, welcome to the show.
All right, thank you so much, Victor. Thank you for having me.
Very excited to have you.
Great to be here.
And we had to finish waiting for the gardeners to finish, but
You should really get the gardener schedule, is what I'm saying.
yes, I think when I have a seat on the Long Branch City Council,
I like it.
I think we'll as you said, I'll have the pull there.
You'll have pull. You'll have some
I'll have
pull.
the pull, and then we'll be able to control the studio. You know,
Good.
prime.
By the way, it's a
prime
great
time.
studio. It's fantastic.
It's thank God, yeah.
Fantastic.
So we do have to work with what God gives us. If we have rain, if we have
He's giving us a breeze now, so let's go
a little
with it,
breeze, yeah. It feels like like they said feels like 95 or something. I don't know.
Yeah, it's hot.
Something
hot.
crazy. But for those who don't know you, how do you explain what you do?
So we're in the real estate business. We have a debt and equity business. We invest in apartment buildings and medical office buildings, and those buildings are in different states: New York, New Jersey, Atlanta,
Sure.
North Carolina, and Philadelphia. And the medical office properties are specifically in New Jersey, and that's one business. And the other business is we have a debt business. We lend money on real estate properties. We have three types of lending we do. One is senior mortgages, which is a first mortgage. Then there are second mortgages called mezzanine loans, and something called preferred equity. So we lend on properties, and we lend to people who we like a lot as borrowers, and on properties and locations that we like a lot, that we would be in those areas if we could be.
Cool. You work with your family or?
So it's me, and then I have various partners, some
Sure.
within the community, some out of the community, that we partner up. Specifically in the debt business, I have one partner in the community, which is great. And then outside the community, we have various partners we invest with in the equity in the apartment buildings.
Sure.
And the medical office is also within the community.
Got it. So are you say you have two separate businesses? Are they under the same umbrella company?
Same umbrella, Equities. I just have two different verticals where I can invest.
Cool. Nice. Okay, cool. So I want to get into sort of your early days, how you got into this. How long have you been doing this specifically?
So the company is in business 7 years.
Okay, so fairly recent.
I've been in the real estate business probably 11 years, 12 years.
Got it.
So I've been preceding that. I was in the stock market as a broker and a trader for a very long time.
Sure.
Then I morphed out of that and I got into the real estate business because I just knew a lot of people in the real estate business. So I figured
There's a natural
it would be
progression.
a natural
right?
progression. I was a broker. I sold, both for property and for finance. I worked at a bank. I worked for developers. And then when I turned, I guess, 49, maybe it's almost 10 years, 48, 49, I decided to start my own company.
Nice. Okay, cool. And was that, that decision to start your own company, that I'm assuming you felt ready to do it after all of your, 20, 30 years of experience at that point?
So it was sort of based as need, right? Because I found that in the corporate world, which I was entrepreneurial for a long time. I went to the corporate world. I exited the corporate world. I found the corporate world just wasn't for me, and the entrepreneurial way was better suited for me.
I'm interested in that because some people associate business as corporate entrepreneurship and everything else that comes with it. But I find it hard to understand as somebody who's entrepreneurial, right? And also somebody who wants to go into finance in college. I find it hard to grapple with that. Like, how am I going to be an investment banker if I want to start my own company? What do you think about that?
So I would tell you, not each route is for everybody, right?
Right.
So you'll only know once you're in it, right?
You have to try
So
it.
you may go into the corporate world and you may love it. It may be for you. It has the structure, it has the planning, it has the agenda. It may be for you. You may go into the entrepreneurial world and that may be for you. You'll never really know until you're in it, right?
Which one's for you?
The entrepreneurial world, right?
And that's where you are now.
That's my world, right? It works for me. That doesn't mean the corporate world couldn't have worked for me under different circumstances, but it didn't. But I knew when I went into the corporate world, it was by circumstance. It was an opportunity. I took it. At that time in my life, I had to do it, and I did it, right? But new and starting out, you're not really sure what you want to do, right?
True.
So some people think they know what they want to do when they're 19 or 18, but you don't really know, right? Some people might, but you'll know after you've spent some time in it, and maybe you'll have some insight by speaking to people who've gone through it, and maybe it'll mold, which is why we're here, I think, right? And maybe that'll mold your thinking in some way, shape, or form.
Nice. Cool. So when you first started out in the corporate world, like you mentioned you were always entrepreneurial. Did you also have that inner conflict between entrepreneurship and, working in the system, or did that develop later on?
So it developed. It wasn't really a conflict. It kind of developed later on. Like I'm a big believer in not wasting time, and I found sometimes in the corporate world, there's a lot of time waste, a lot of groupthink,
Bureaucracy.
and a lot of bureaucracy. Sometimes, not always. So it was just more of where do I think my skills or what I think I can do will be the best suited for me, right? And that's how it just developed over time. I can't really cite one specific.
Right.
I remember when I was 18 or 19 trying to figure out franchising, right? I remember doing that, sitting and reading about franchising because I felt that was an entrepreneurial thing to do. I never did it.
Right.
Right? But I thought that was sort of the way to go. And when I was younger, I was a stockbroker, which even though you're in a corporate environment, it's eat what you kill,
Right.
So if you don't produce, you don't make money. So
Right.
it's corporate, but you got to produce, right? So it just sort of naturally flowed, I think.
Following college, you started as a stockbroker right off the bat?
Following college, I went to brokerage, and there was a couple of years of learning curve in that.
Right, as there usually is, right?
And it was it was corporate, but entrepreneurial because, like I said, you had the big structure of the company, but you had to just get out there and hit the phones all day long.
And you have that little autonomy, leeway to
if you had the autonomy, because if you're not in the office at 7:00 in the morning and they're 8:00 at night, you're not going to make money, right? So that was that, right? So you had to really do that. And if you wanted to be 9 to 5, you could, but at that particular point, you probably wouldn't have made it, right?
You'd fall behind.
If we fall behind, because your peers were making 300, 400, 500 phone calls a day. If you were making 150 phone calls a day, unless you had some magic touch, you weren't going to get there, So you sort of had to have that entrepreneurial urge to get out there and keep going, no matter what time it was at night or what time it was in the morning, and you had to just do that.
You have to have the drive, or else.
You had to have the drive. You didn't have the drive, you're not going to make it.
Right. It sounds like, correct me if I'm wrong, you ever watched The Wolf of Wall Street?
Yeah.
Yeah.
I know them. I knew the Wolf of Wall Street.
Of course.
I knew that company very well back then.
It sounds like was it a similar environment where it was very fast paced?
It was fast paced, but not corrupt, right? That was as you know from the movie, sort of corrupt,
little,
right?
Right.
But
Dramatic
it was a very
depiction, also, yeah.
And dramatized a little bit, right? So it was a very fast paced environment.
Yeah.
You had to be on the phones all day long. You had to have an understanding of what you were, trying to get investors to come into you with. If you wanted to take a break, you could. You weren't chained to your desk. If you wanted to eat lunch, you should go eat lunch, right? But when I went into the trading business, not the brokerage business, you really were chained to your desk all day long. So that was a different type of. There was the brokerage business, then there was the actual trading business, handling clients that traded aggressively on a day-to-day basis. So it was two different things, but you just had to know you weren't clocking in, clocking out.
So when you were in the brokerage business, does that business still exist the way it did then?
On Wall Street, I'm not really sure. I think it does to some degree.
But then again, a lot of it must have been automated,
Then nothing was automated then.
Right.
Then it was all,
I'm saying,
you wrote it down, you clocked it, you gave it to somebody to type into.
Where we are now, right, exactly.
It would be very different today, but I think it would be the same premise that if you're not on the phones all day long, you're not talking to investors, you're not going to be producing.
So we took that little gardening break, and now we're back. Hopefully they won't come back, but
Let's hope not.
We got to work with them. So, okay, so you're on you're in the brokerage business, right, on Wall Street, and we just mentioned that the job that that as it was then probably is not the same, or is
there may be similarities. I just really couldn't tell you because I'm not in
you're
that
not in the
space
business anymore, right?
But there have to be some.
I'm sure.
I would imagine there's some similarities today.
So as a broker, you're calling people up, and are you pitching investments, or like what's your primary day to day?
So then the primary day-to-day was calling potential investors,
Sure.
explaining to them what you do, qualifying them to make sure that you're bringing them ideas that they're interested in and that they can actually execute. And you'd probably make an easy 300 phone calls in a given day, if not 500.
Wow.
Out of those 300 to 500, if you spoke to 20 people, it was a lot, right? If you then got 3 leads, it was a good day. If you got 5, it was amazing, right?
Right.
But if you had, I'm just sort of rounding a little bit, but if you had 5 leads a day, and that was 25 a week, and that's 100 a month, you might have 3, 4 real clients after that, maybe 5 or 6. I don't know the exact math, but that was sort of the rough numbers behind it. But you had to just call, unless you had like 100 people you knew want to just give you money every minute.
Right.
Doesn't always work that way. But that was sort of the essence behind what that was.
And you maintain these relationships with these clients, right?
I maintain them with some of them almost 35 years later. I still have some of those relationships in the real estate business.
That's cool.
I'm in. Yeah.
So you're trying to you're trying to get leads at like a 0.1% success rate, if that.
Right, which doesn't work for the corporate-minded individual. They can't handle the failure rate because it's not really a failure rate; it's a small success rate. But that's what it is. And
how did you deal with that?
I have a high pain tolerance. I don't know. That must be. I understood the math. I understood that you had to be there every day, calling, and taking the calls, and making the pitch, and explaining it to people, and walking them through it, and owning up to things that may not work right. You have to be doing that every day. And if you weren't willing to do that 10, 12 hours a day, you weren't going to make it.
And that's how you stand out in that business.
In that business, you have to, unless you have some magic potion, you have to really, put the time in.
Love it.
But I would say any business, really.
That's a lesson that you could take to any, you could apply to anywhere.
Business. If you're not going to put the time in, the odds are someone else will, and the success will probably go their way. Yeah,
for sure. So after you're in the brokerage business for how long, approximately?
I think it was a 15-year stint on Wall Street.
Got it.
Give or take.
And then you go into trading.
Well, that was part of it. Trading was part of the brokerage.
Cool.
So the brokerage morphed into trading.
Got it.
And the difference was the brokerage business was more toward retail-oriented investors who had other businesses. They had, they were in the garment center, they were doctors, lawyers, whatever, and they wanted to invest their money in the stock market. The trading business was geared up more toward professional day traders who traded their money in the stock market on a daily basis.
Got it.
And they were in and out every day, 200 and some odd days a year that the market was open. That was that business.
And they're trying to capitalize on small movements.
Small to mid-term movements. That was a very intense business because
That's down to the second at that point.
That was down to the second, to the minute. We had 3 phones going at once,
Wow.
18 different computer monitors, people yelling, screaming. It was almost like kindergarten to some degree, but it was a very high-powered, high-pressured environment at a trading desk. And we really never had time to go to lunch. Forget about, taking, 2 hours off to get a hair, whatever you wanted to do.
Do a podcast.
It didn't happen because the market was open. To do a podcast, right? Because the market was open 9:30 to 4. But your day started at 7 a.m. because you had to check.
Doing the research.
Checking the trades from the day before, making sure things were right, getting your best clients on the line, taking the phone calls, handling problems. So you had a 2.5 to 3 hour window in the morning before the market opened. And once the market opened, you couldn't go back and figure out what yesterday's problem was, right? And if yesterday's problem came up, you had to get somebody to do it for you because you couldn't leave your trading desk. You had to sit there, right, and take the phone calls. So that was, we used to trade on that desk. I mean, I personally traded a couple 100 million shares a year at the time. It was incredible, but billions of shares a year we traded on that desk for clients in the house account. And there was no such thing as going to lunch, really. You ordered lunch in, it came to the desk, you ate it in 5 seconds, and that was what it was. But that was entrepreneurial in the sense you have to be willing to sit there all day, grind it out, 7 o'clock in the morning, and the market closed at 4, but you were still there at 5:30. Like you weren't, maybe toward the later part of my career on Wall Street, I was able to leave at 4:15, let's say, because I figured out a way to get that work done elsewhere. But you were there all day too. It was a very stressful minute-to-minute transactional environment.
You're in the trading business. You're trading tens of thousands of shares at a time in order to capitalize on small price increases.
Correct. So the goal was, whether we were trading for the firm account or for investor accounts, the goal was to capture these short-term movements. Now, short-term could have meant 5 minutes or 3 days. It sort of depends on that particular investor's risk appetite, right? So, but our phones were ringing all day long with buy-sell orders. You had to get them all right. If you got them wrong, it was called an error. And there was actually an error account on Wall Street. So you were almost expected to make mistakes, which is also what entrepreneurs like, you know? So there was an account called an error account. If you bought something instead of sold something and you realized it, you put that trade in the error account, you reversed it, got out of it. It didn't matter if you had a loss because you were expected to have an error account. That's why there was an actual established account. But it was very active buying and selling from the minute the market opened till the minute it closed. And you had to be able to calculate in your head and keep track of everything where you were in those orders. Of course, you had it on paper. At the time, you wrote everything down in a buy-sell pad, which probably doesn't exist today. But you wrote it down and you kept track of it, and you had to just always know which orders you were working. You would have multiple orders for multiple clients on different stocks, buying, selling. Sometimes you're buying and selling the same stock. Sometimes you're buying and selling different stocks. You were shorting stocks. It was, very intense minute to minute, which produced like a lot of stress. I used to answer the phone. I used to have home telephones on a wall. I would answer the phone at home trading, because I answered the phone trading 3,500 times a day.
Wow.
So I'd go home, the phone, I would go trading, which obviously I should be answering trading at home, but I did that all the time.
That's funny. Yeah. So those 5-minute, trades, let's say, those really, really short-term trades, are they rooted in, research, specifics about the company? Is that just the market doing its thing?
Those short-term trades were specifically following the short-term momentum in the stock. So there were certain stocks at the time, on any given day, were acting stronger than the market, and certain stocks at the time, on any given day, would be weaker than the market. And what good traders would do, they would try to capitalize on that discrepancy. So they would try to figure out, and most of it wasn't 5 minutes, but there were a lot of 5-minute traders. As technology developed more and more, the scalping of the 5 to 6 minute hold frame, or 2-3 minutes even, became more prevalent. But as the day wore on, you could see what stocks had more momentum than others, what stocks had less momentum than others. So good, sharp traders who would read the tape, which is what it was called, would understand that and try to profit from that. And of course, you don't make money every day. I mean, the best traders would make money 35% of the time, I think, or 40% of the time.
Right.
But their losses were quick. They were in and out quickly. They took losses.
And those wins cover the losses.
And the wins would theoretically
tenfold,
cover your losses by,
hopefully.
whatever it is, tenfold, fivefold, ideally by
yeah.
more. But it was intense because you knew you were going to have losses, which entrepreneurs can take.
And you had to stomach that watching the number go down.
The saying was, if you can't lose 50,000 in a day, you can't make 50,000 in a day. And that was sort of the saying, because you couldn't. There's no way. It's impossible. You see your account dwindle, you get nervous, you get stomach pain.
Did you block your emotion from getting in the way of controlling your trades?
It's not so simple, right? You have to completely detach yourself from the money. Right, so like if you have a camera store, let's say, right, and the guy comes in and buys 3 cameras and a calculator, whatever, and then he returns the calculator, you don't typically go, "Oh, I lost the calculator," right? But if for some reason when you lose money on a trade, you automatically want to kick yourself. So you have to completely fight the urge to kick yourself when you lose money or talk badly about yourself. In fact, we had a rule in the trading room that I think it was, if you lost money 3 days in a row, you couldn't come in the next day. And if you lost money for the week, you had to take like the next week off. There was I forget the exact metrics, but the guy who ran the show ran it brilliantly, because he believed that if once you lost money for a couple of days in a row, you were out of it. You had to just regroup, take a day off, or 2 days, or whatever it may be. But you had to be willing to take those losses, which most entrepreneurs in whatever business they're in, I think, or should be willing to take some losses.
And did you find that your office, the floor was full of entrepreneurial people?
Entrepreneurs, or those who want to become entrepreneurs. There were some corporate people who came over who couldn't make the switch.
Interesting. Because
they were maybe, let's say, they came from an MBA environment where their thought process mattered. But here, your thought process didn't matter if you weren't making money.
Right.
So we had guys in the trading room who probably didn't finish high school, but made a lot of money.
Interesting.
A lot of money, because they had an instinct, they had a knack, they had the risk-taking capabilities. We had guys that couldn't speak English who made a lot of money. Broken English who were making a lot of money.
It sounds very high stress, very fast paced.
Yeah.
And I'm assuming that what that taught you carried over into starting your business now.
So my business now sort of started because I went back into the corporate world later on in life, midlife, let's
Sure.
say, and it just wasn't working out. Doesn't work out for everybody. So I decided, what could I do? I knew a lot of people in real estate, and I knew there was a way to put that together because some people have money and some people have deals, and sometimes the two need to get together, right? So I figured out a way to put those two together by finding people who are smart, who are honest, ethical, most important thing.
And you had built up those connections.
And you build up the connections over many years, decades even in some cases, and you figure out a way to match that up where you bring the money to the deal and the deal to the money. And some people who are busy running their own businesses don't know how to invest money. They know their business cold, right? But they don't really know how to invest money. They think they do. In some cases they do, but in most cases they don't. They're very hyper-focused on their business, so they needed a place to say, hey, we can trust these people. Let's put some money with them, and hopefully it'll earn us a rate of return over time.
And it sounds like you're putting people together, right?
Yeah.
You're bringing them together, and the only way you're able to do that is from all of the connections and relationships you've built up.
So we've built up these relationships over many, many years, in some cases 30 and 40 years. I'm 58, right? So in some cases, many years. And that's what matters in business, relationships, right? So if you're going to put money over a relationship, you're not going to be successful in the long term. Fees over relationships, you're not going to be successful over the long term. Relationships matter, right? So, and it's good. And some relationships you'll make as young adults will last you, potentially a lifetime.
Right.
40 years from now, you might be doing business with the same people you meet today.
It's
hard to think of now.
Yeah, it's interesting to think about.
But I see in my own life, it's just what happened, and realizing that I wanted to be the investor, not the operator, found the niche for me where I could go to people who needed money or who wanted to raise money or who needed to borrow money and say, hey, I can put that money together for you. Let's do business together. And in the beginning, it was slow, like all businesses. Nothing works, overnight. But gradually, on building of those relationships, it just worked. And thank God it does work.
Right. And so going from, you said you mentioned you were in corporate, in the corporate world directly before you started where you are now. You started your company now, right? So did you find that transition a little scary at first? Because you're starting something new, right? You're not, maybe for the first time, you're not employed by somebody with a salary, but you control now what's coming in.
Correct. So when I started my business as it exists today, I had very little money in the bank, very little coming in because I left my job. It was almost crazy, right, to do it. But I recognized that I guess it was 48 or 49 at the time, that the only way to get where I wanted to be was to maybe take a step back and figure out the next steps forward.
Nice.
And it was a little, you have bills, you don't have these bills now, let's say, but as you get older, be married, God willing, you have children, you'll have bills, things you have to pay for. And that never stops, right? If your income stops, the bills don't stop. So you need to be mentally prepared to figure out how to get by for that year or two or three if the money does not start to come in.
And your stomach, which you developed on the trading floor, helped you with that.
You need a stomach. Pepto-Bismol helped, right? But you need a stomach.
Right.
And you have to, and I'll give you an example. Young man in the community called me about a job a couple of years ago. And I said to him, do you want the entrepreneurial life? Because this is what it is. He goes, no, I really want the corporate life. I said, you should go to the corporate world. And he went to corporate world. And he's in the corporate world today. He's a little old. I forget the exact age. But now he wants the entrepreneurial life. And I said, are you sure? Because you didn't want it a couple of years ago. You spend some time in it now. You're more than a few years into it now. He goes, yeah, I definitely want it. So I think he does. I think he does want it. How he finds his way, everyone has to, you have to know yourself. Right? You have to figure it out yourself.
Right. Something that I struggle with that I'm a little, that I worry about is, so you graduate college, right? And that's sort of you're working and your life begins, right? What sort of gets me a little nervous about the future is that you have to try things out,
right.
But I want to try things out from earlier because I don't want to be taking these risks, and maybe if I don't like the corporate world after 5 years of being in it after college, then I have to sort of take this big risk. when
Right.
I'm 25, and that's got to be tough.
So I would say two things, maybe more. At 25, it's not so much of a big risk. When you're 48, it's bigger.
Yeah,
I would
true,
say that for
true.
sure, 100% for sure. You will learn some things in the corporate world. It's not like it's a zero-sum
For
game.
sure,
You
no,
learn
for sure.
nothing. I made a couple of amazing relationships from the corporate world. I have a dear friend to this day from the corporate world who's like a brother to me. He's my Irish brother. You know, I made such a close connection with him. I worked directly under him at a bank, and but so you will get some good takeaways and other relationships from the corporate world. But you'll never know till you try. And
Yeah,
there's
it's true.
and there's always fear in the unknown. Look, you could start a business tomorrow, and it doesn't work out. And that's a fact of life, unfortunately. You can get a corporate job tomorrow, and in 25 years from now, run that company and be the guy, right?
Also true.
So you don't know. You have to, especially when you're young, you have an ability to take those chances, take those risks, because you don't have 4 kids in yeshiva. You don't have a house to take care of. You don't have certain things, dental bills, like whatever,
Yeah.
clothing.
Things that you wouldn't think about when you're 17.
You're 17, 18, you don't have that necessarily. For most people don't have that when they're that age. Some people might, but most people don't, right? So you have to, taking a job is a risk, starting a business is a risk. Nothing's a guarantee, but you won't know until you try what you think you want to do. If you want to be a doctor, that's great. You got to go to medical school. You got to be a doctor. You may not want to be a doctor after you become a doctor. That's also a risk, right? I know a lawyer she became a lawyer. She's an interior decorator now,
Right.
so she found her passion 20 years later, so you it's kind of hard when you're 17, 18. When I was 17,
Yeah.
18, like, I didn't know. Like, nobody really knows. You think you know, you don't really know. I wanted to be in finance. Okay, I went to become a stockbroker. Okay, I didn't really know, but I really did know after a while. Like, I love this stuff, And then the business changed over time, and I moved on, right? And sometimes you have to be willing to move on. But whatever your next step is, you'll go to college, or maybe during college you'll get exposure to different people, and podcasts like this are great. And to further that, even the community is great. Like,
Amazing.
if you're a young person in the community, middle age, you can call on so many people in the community who are willing to sit down with you and talk to you. I don't know that it exists anywhere in the world. It's really incredible. I've spent time in many people's offices trying to rejigger businesses, and people now, they come to me for some whatever reason, right? But it's so much you can learn from that is unavailable to many people.
Yeah, no, it's amazing, and like in the research for the podcast, and in my outreach to professionals like you, and people in all different types of businesses, I'm just like I'm finding that there's so many people in the community who have seen success and who are willing to share it with people. It's
Almost
amazing.
all of them. I would say almost all of them
Yeah.
will do it.
Yeah, and I'm finding that, by the way. Yeah,
And you'll have 100 different podcasts
yeah,
eventually
for sure.
with 100 different people willing to help you.
100%. So you mentioned passion, following your passion. I want to ask you about that. Do you think that, at what point do you think that following your passion becomes too much in terms of money, and the money coming in, finances, things like that?
If I was 19 or 20 and I said I want to be the next Jeff Bezos, right? That might be a little too much, right?
Right.
I may have a great idea. It may be a great idea. I might not make $300 billion, but I might make $5 million, right? So you have to have passion for what you want to do, but you have to have a realistic example. Like, somebody called me recently and they said, well, I'm switching gears in my career. I need something I can make $2 million a year next year. I said, good luck. I know what to tell you. I wish you a lot of luck. I don't know that you'll get there, but I do wish you a lot of luck, and I hope you get there, right? So whether that was realistic or not on his part, I don't know. I don't think it is, personally, right? But you have to, if you want to be an architect, you got to put your life into architecture. If you want to sell T-shirts to Walmart with a special design, whatever, you got to be passionate about design and sales to Walmart. If you want to be in finance, you have to be passionate about numbers. If you want to have a restaurant, you better be passionate about food and working 300 hours a week, right? So, and then you have to have a realistic goal. It's not a realistic, in my opinion anyway, it's not a realistic goal to say, I want to be Jeff Bezos. It might be nice. I want to play for the Knicks and get $40 million a year for doing that, but it's not realistic, right? So in my mind anyway, and some people may differ, you have to have a goal. The goal would be for me to start a company. The goal would be for me to have 3 clients at the end of the year, depending, what the business is, right? The goal would be for me to be cash flow positive in 2 years. There has to be some bite-sized goals to reach the next level. And then you'll say, holy cow, look what happened in 5 years, right? Now, some people can achieve major success over a year, 2, 3. It does happen. But most people, it takes extended periods of time to get there. And generally, the slower it is, the better it is, because you don't get too ahead of yourself, I think, But you have to have a realistic goal, whatever that goal may be. And, making $100 million next year might not be the goal.
Right. It's something that I think about too, following your passion, but also making sure that there's money coming in. You have to obviously devote yourself fully if you want to be able to do something for a living. But even then, it doesn't always turn out to be so lucrative, and then you have to sort of shift gears.
You have to have the entrepreneur has to have a deep conviction that he can handle the pain of entrepreneurship.
And you have to wait it out.
Right. But also, like I said before, there is uncertainty in the corporate world. It sometimes doesn't work out. No fault of your own. The company downsizes. Now what do you want to do? You're out, So it happens. So you have to have tolerance for that as well. There's no guarantee. But what do you want to do? If you had to start a job tomorrow, business tomorrow, what do you want to do?
So planning on studying finance.
So you want to be in the finance world, right? Do you have an inkling of what specific finance or not really?
I'm
interviewing you now, right?
Elliot's the host.
Right, I'm the host now. Right. So what turned you on to private equity? I think this is helpful. Like, what turned you on to private equity?
I like the idea of being able to learn, the fundamentals of any industry of a business for a certain period, like a relatively short period of time, whether it's 6 months, a year and a half. You delve into that business and you try to, I'm sort of explaining what private equity does, but I like the idea of being able to switch around, to different industries. It feels like you're getting a taste of everything all at once.
You're 17?
Yeah.
So I would say most 17-year-olds can't articulate that, right?
Right.
Some can, most can't. So I would say for anyone who's 17 in high school or maybe out of high school, find something you like, right? Like, you found this private equity, whether you read an article, whether your parents told you something, whether you heard something, you caught an article in the Wall Street Journal, whatever you did, something in you at a young age lit a spark, right? So not everyone has that spark right away. It may take someone until they're 19 or 20, or sometimes they take a year off after high school. They don't know what they want to do, which is also probably okay for some people. But you have a bottom semblance of something you want to do. Where that unfolds, you won't know another several years.
Right.
Because today the private equity business is this. You'll be in college the next 4 years, I guess. You graduated high school, right?
I graduated. I'm going to Israel, and then I'm going to college.
Good. So the next 4 years, there'll be different things going on in your life, and maybe it won't be private equity. Maybe it'll be whatever it'll be, right?
So true.
So you don't know, but you have an inkling. I don't think most 17-year-olds even have that, and they don't need to have it necessarily. But you found something that lit a spark, and hopefully, everybody could find that. Maybe a young man or young woman loves cars. Okay, they can go into the car business, right? There's nothing wrong with doing that, or whatever it is. Leasing, not building cars, but leasing cars, detailing cars. Like, there's so many things you could do. Nobody wakes up and says, I love the peanut business, right? So somehow you fall into that business maybe because you found a good niche where, buying peanuts in one country and selling them to another country potentially. But a spark will light in everybody at some point to what they want to do. And
so, to put it back on your situation, you knew you wanted to do finance, something in the financial sector. And your first couple of years working on Wall Street validated that, right? And then you continued that to the point where you are today, where you run a company, where you run a finance company, pretty much, right? Right. I love it. It's a
different type of real estate is different transactionally than on Wall Street. On Wall Street, like I said, we were doing billions of shares a year, thousands and tens of thousands of transactions on a weekly basis. Now I look at 1,000, 2,000, 3,000 transactions to get 5 things done over the course of the year, right?
So it's smaller. It's smaller volume, but
smaller volume.
Bigger projects.
Well, not always bigger projects, but different type of projects.
Yeah.
So like every time you bought and sold a stock, and a lot of that was done over the phone back in the day. You'd call up trader A, say I want to buy 5,000 Microsoft, 100 and a quarter. Boom, you're done, right? And that was the transaction, right? Now, if you want to buy property, that could be 2 months of negotiation and 3
Right.
months till you close. Or if you
Right.
want to make a loan, we closed a loan just yesterday that was supposed to close, I think, mid-June, and
Oh,
it
wow.
closed end of July. And we were working on it for a month preceding, so it's a different type of transaction
Do
where
you
it's
see those type
slower.
of delays often?
Pretty much.
Right.
There's always
So you
something that pops up, but just the way it is. Like on Wall Street, that's impossible. It's a second
Yeah.
transaction.
Yeah.
Boom. Now with computers, it's maybe a nanosecond
Right.
transaction. But we used to make thousands of phone calls, make and take a day to get transactions done on the minute.
And,
On the
and
minute.
what you're doing now, it's more, it's a little, it's stretched out over a longer period of time.
Much more stretched out. We probably look at, I don't even know anymore, several hundred types of transactions on a monthly basis, probably. And if we make an offer on 3, it's a lot.
Right.
If 1 gets done, it's a lot. And that's just
Right.
how it works in our business.
And that, that all fills your time and the time that,
All
your
fills the
employees
time.
have.
There are days where I could be working from 7 in the morning till 8 o'clock at night, and I'm not done. And then there are days like 2 in the afternoon, I'm trying to find something to do, right? So there's no consistency in timing. It's a little different. There are some days, the time just keeps going, like I said. But it's
Right.
but everything gets done in its time when it has to get done.
Right, right, for sure. And I actually we were speaking about this a little off camera, but I want to talk to you a little bit about working from home. I think I find it interesting. So you told me you work from home. You've been working from home even, from before COVID. And how do you like it? You tell me.
I have no problem with it. So even when I was on Wall Street, before work from home was a big deal, I used to work from home in the summertime. So I moved my office, I moved the computers, put them in my third floor, which was a empty bedroom at that time.
Sure.
I made an office. And 20 years ago, before it was popular, I was able to do it. But on and off over the years, I've worked at home. And certainly from before COVID, I was probably working at home 3 days a week. And during COVID, obviously, we stayed. I went back to the office after COVID just because I wanted to. But then I decided I don't need the commute. It's just easy for me. I save 10 hours a week, an hour each way, let's say, 10 hours a week, 40 hours a month, 500 whatever hours a year that is. To me, it's more beneficial. It's less stressful. I have no problem. It's seamless for me. I would say the majority of the time the house is silent, except maybe now where the grandchildren are at home. Bath
Right.
time is probably
Right.
not so silent. But generally speaking, the house is quiet. I don't have to order lunch. If I want to order lunch, I can. It just comes to the house, Uber Eats, right? I've had no problem. Some people, I think, have a problem with it. It's a matter of discipline. And I have no problem sitting at my desk, blocking everything out during the course of a day. And you have to be able to do
I
that.
like it. For people who can achieve it well, who can execute it well, I think it's very good. The problem is it's hard,
It's for some businesses, it's hard too. Some people have to be on top of their staff or with
Yeah.
their staff 20, they have a staff of 25 or
Right.
55 or whatever. It might have worked for 6 months during COVID, but it may not work all the time, right? And it probably doesn't work for a lot of businesses all the time. For me, I outsource a lot, and then I have partners who have staffing, so I sort of glean off of that a little bit, right? But for me personally, it's been actually a blessing to be able to do what I want and come in and go as I please and work as late as I want or as early as I want or not at all during the course of a day to block some time out. Like for this example,
For sure.
I block the time out. I'm able to do it. If I was in the city, I'd never get here at 4 o'clock. I'm not
Right.
leaving at 2 o'clock to get here at 4 o'clock to stay until 6 o'clock or whatever the timing is.
Right,
Whatever. But I
right.
can do it because I know I've accomplished what I have to accomplish today. And if I'll be home, whatever time we're done, I'll be home in 10 minutes. And I can sit at my desk for another 2 hours if I want to and finish things up, which I probably actually will,
So looking back
Yeah.
at your whole career path, right? You were on Wall Street and the corporate world for a bunch of years, and you used those experiences, relationships that you built up to start your own company. What has been 1, 2, or 3 key principles that stuck with you the entire time that allowed you to be where you are today?
Yeah. So it may sound old-fashioned, but whatever. I believe in word is your bond, right? So
I like that.
word is your bond. If you tell someone you're going to do something, you're going to do it, right? I have some partners. We have email agreements we can't even find anymore of what our deals are together. And it was really done on a handshake and a hug, right? Now some people would say that's crazy, right? But people sign things sometimes don't really mean to live up to it, right? So really, your word is your bond. You have to have resilience because things won't always go your way. I and many people have had periods of, call it, less than successful business endeavors, and you have to have that resilience. You need the faith that it's going to work out. You have to have a good sense of humor. You gotta have a good sense of humor. You know, I've been lucky enough to marry off 3 daughters, and I'm very fortunate. You know, age order no less, very fortunate. And at each wedding, I tell the kids the same thing. I say to them, you know, we all want the best for you, but sometimes life throws you a curveball, and sometimes things don't work out the way you'd like it to work out. So within those experiences, you have to just dig deep, and you have to have resilience. You have to have a positive attitude. You got to throw some praying in there. You know, you have to throw a little bit of everything, because you know, when things are working out and everything's all wonderful and great, you know, everyone's a genius, right? Everyone's a genius. When things are maybe less than rosy and less than perfect, that's when it really tells, you know, what you're made of, quite frankly. And, you know, many people, myself included, have had, like I said, less than stellar business experiences at times in their lives. And that's the moment in time where you figure it out. You have to figure it out. So it's really a combination of a few things. It's that, like I said, that honesty, that work ethic, the resilience, the faith, the hoping for a better day type of thing, and the smarts and the realistic expectations of what you're trying to accomplish. The breeze is back.
The breeze is back. The cameras are back.
The breeze is back and the cameras are back.
Yeah, the cameras, they cut out for a second, but I love it. I think thinking about this as a 17-year-old, you know, the resilience that you're gonna need if you want to become an entrepreneur, and even if you want to be in the corporate world, right? You were on Wall Street, and you had to be in the office, you know, 8 o'clock, be out 8 o'clock or whatever the hours were, like
6:30 in the morning.
6:30 a.m. until
whenever.
Until it literally can go till whenever.
Right.
That's you have to be able to stomach that.
You got to stomach it, and you know, for better or worse, some people aren't ready to do that.
Right.
But you have to be ready to do it. Look, you're in the corporate world, and your boss at 4 o'clock on a Friday says, I need this Monday. You know, you're working Sunday. You have to get it done. It doesn't matter that you don't want to get it done.
Yeah.
Your boss is telling you, get it done.
Yeah.
If you're an entrepreneur and the client calls you and says, I need it Monday, guess what? You're getting it done.
It's
right?
happening.
So it's not for everyone, but you need to have that mentality that's going to get done.
For sure. So I wanna shift gears a little
Sure.
bit. You do a lot of speaking engagements,
Yeah.
in terms of, you know, panels, speaker series, whatever it may be, and unofficial mentorship, right? With, you know, people call you up, they ask you for help, and you're happy to entertain that. Why? Obviously, I know you want to inspire people, but why?
So from the real estate perspective, I attend some conferences either as a panelist or as a moderator. It gets good exposure for me, for the company. There are times when people ask me to do them a favor. Hey, the moderator dropped out. Could you fill in? And I'm always willing to do that if I have, obviously, that time slot for that next day or 3 days from now has to be available. But if it is, I'm always willing to help. If they didn't need me for whatever reason in the beginning because they had somebody else, I've done that. I've helped out. It's always good to help people who are in a pinch potentially. It's good advertising. It's good networking. And I do it because it gets exposure. And businesses need exposure. Businesses need a way of touching different people and getting their eyeballs on you. And when you're moderating a panel and you're asking questions of other people, you also learn things from smart people, which is good. And then when you're answering a moderator's questions, hopefully people think you're smart, right? And then from a mentorship standpoint, you know, along the way, I could probably count in my head numerous people who were willing to sit with me from the community especially and outside, work through an issue, discuss a problem, brainstorm, give advice. And sometimes the advice is not what you want to hear, but it's coming from their heart, so you know it's good advice, right? And if somebody needs the same thing today, you have to help them. You have to. If somebody asks, if you haven't had help from anybody along the way, and life's been a glorious path of roses, let's say, you know, you have to be willing to help that next person to the extent you can. It's just something that, you know, as human beings, even as Jews, we should be doing.
For sure.
I very much feel, you know, grateful to people that have taken out their time to help me. Why shouldn't I help the next person to the extent that I can?
I love it. That's great. I want to ask you,
Sure.
what was your momentum moment? What was the moment where you saw that, you know, you were doing something and it was working, whether it be in the corporate world, whether it be starting your company, and all you came to the realization that what you were doing was working and you just keep doing it, you know?
Wow, it's a really good question. So, you're 17, you said, right? That's a
17.
really good question.
Thank you.
When I started my business in its own form now, after a year, we weren't getting anywhere. A year later, when I looked back on the previous 2-year period, I said, wow, I can't believe I did this. I can't believe I put this deal together, that deal together. Wow, I raised this much money. It just dawned on me something was working. So I sat down and tried to figure out what it was, and what I'm not doing that could sort of expand on it. And I guess it worked, right? I guess it worked. Very thankfully.
And, in the day-to-day, you don't really realize that because you have your head down and you're working and you're grinding. But when you take a step back, you look up after
Right.
a little while. I did this.
Right. In the day-to-day, it's hard to because you have to get a task done that minute, that day. That's why Sundays are great, because you could sit back on a Sunday potentially and say, oh, wow, look what happened this last year. Or at the end of the year, maybe things are a little quieter, let's say. There's always a time frame or maybe you're on vacation for a few days and you have to reassess life or you have a time to think things through. But yeah, if you have to take it, some people say day by day. I try to take it 15 minutes at a time, So, and then you look back and say, wow, look what happened over the last 2 years, 5 years. If we keep going at this pace, 5 years from now, hopefully we'll be, even a little better still. And that's been helpful to me, taking it slow and being grateful for everything, because if you're not grateful for it, that's not good either, right? You have to sort of be grateful for it.
If you're not grateful for it, there's really no point.
You got to be grateful for what you have. It's important, and it helps.
Amazing. Okay, and that's where you are today. Amazing.
Right.
Elliot, thank you for coming on.
Thanks for having me. This
I
was
really
great.
appreciate it.
Yeah.
I'm going to rename the podcast to Momentum with the Gardeners.
Momentum with the. I like that. I like
yeah,
that.
we might do that. And really great conversation, and looking forward to keeping in touch.
All right, you too. Anytime. Please call. Anytime.
Thank you for watching this week's episode of the Momentum Podcast. Please subscribe to us on Spotify, YouTube, Instagram. Leave a like, a comment, really anything will help us out. Let me know what you thought of this episode, and until next time.